Hey, what's up, you guys? Swan here from Swan Things. And today, let's talk about an underrated financial tool money market funds. Now, everyone knows that Malaysians love putting their money into fixed deposits, but not many people know that you can get so much more out of your money by switching over to money market funds. So, in this video, I'm going to be breaking down everything you need to know about money market funds. How is it superior to fixed deposits? Why it's a great financial tool, and how you can use it to maximize your cash returns. So without further ado, let's begin. Money market funds are like the better looking cousins to fixed deposits. But before we get into why that is, let's take a look at why fixed deposits are so popular in the first place. Fixed deposits are super popular because it's secure and predictable. You lock away your money in a bank, and by the end of the deposit period, you get all your money back plus a guaranteed interest. However, the price you pay for this security is in liquidity. Fixed deposits are illiquid, which means that if you choose to take out even a single cent out of your fixed deposit before the maturity date, you'll be hit with an interest rate penalty and get next to no interest. Moreover, high interest rate fixed deposits often come with requirements like higher minimum deposits, longer maturity dates, and some are even bundled with a whole bunch of products that you don't need or want. These restrictions and inflexibility is why I do not put any money in fixed deposits at all. The extra 2 or 3% interest just isn't worth it. Now, this is where money market funds come in. Money market funds are able to generate returns that are on par or slightly higher than fixed deposits while still being flexible and non-restrictive. It can do so because of the way it's structured. Money market funds are sort of like a hybrid between unit trust and fixed deposits, where it pulls together funds from different investors and then invests them into various low-risk money market instruments like short-term bonds, government treasury bills, and yep, you've guessed it, fixed deposits. The interest or profit generated will then be paid back to investors in the form of monthly distributions. Thanks to its structure, money market funds offer a number of distinct advantages. Because of its large fund size, money market funds are able to negotiate competitive interest rates that are often slightly higher than fixed deposits. In terms of safety, the risk is lowered by diversifying across a range of safe assets, often backed by big banks and government. It is so safe, in fact, that many companies choose to hold their cash in money market funds. This allows them to earn some interest while still being able to withdraw it for their daily operations. Next, because money market funds hold a large number of debt and deposits with different maturity dates, they are able to pay out monthly distributions, and the interest you earn is accrued daily. This means that you can withdraw your funds at any given time and still earn interest for the entire duration of deposit. No withdrawal penalties. Best of all, money market funds come with very low to no minimum deposit, and you can also choose to top up to your funds at any given time. This means that you can start earning interest right away without having to save up a minimum amount, and any additional savings will also immediately start earning interest. Lastly, money market funds have no deposit end date, and the interest rate you earn is automatically adjusted to new market rates. This is super convenient because it means that you no longer have to keep shopping around for new fixed deposits. All this at zero upfront sales charge and no withdrawal fees. Now, all these advantages will mean that money market funds will nearly always give you a higher return compared to fixed deposits because you start earning interest immediately on your savings. For example, if you're working towards a 5,000 ringgit emergency fund by saving 300 ringgit a month, starting out with a money market fund will earn you over 110 ringgit in interest versus less than 30 ringgit by saving up for a fixed deposit. Even if you get the highest interest rate fixed deposit available right now, it comes with a longer deposit period of 18 months and a higher minimum deposit of 10,000 ringgit. In this case, even a money market fund with a return of 2.4% per annum will still generate nearly twice the total return thanks to those early distributions. Being able to earn interest immediately on your savings makes a big difference in the long run. Now that we covered the advantages, let's look at the downsides. Unlike fixed deposits, money market funds do not offer capital guarantee, and the fund is not insured by PIDM. Now, this means that there is a very slim chance that you'll lose some amount of money. However, this is extremely unlikely because it will only happen if large banks, big corporations, and governments collectively fail. Next, the interest rate paid out to investors is also not guaranteed and will fluctuate according to the interest rate environment. Now, this can be a good or bad thing depending on the market, but fixed deposits are also exposed to this risk. The only difference is that the interest rates on FDs are locked at the point of deposit, whereas money market funds come with a little bit more uncertainty because the interest rates fluctuate over time. Lastly, where you buy your money market fund matters because withdrawal processing times can take anywhere from 1 to 10 days depending on the platform you use, so do choose carefully. Next, let's talk about the best ways to use a money market fund. Unlike stocks or bonds, money market funds are not tools to grow wealth, but tools to efficiently manage cash. When you're setting up your personal finances, you should assign a different function to different groups of money. Some money should be set aside for daily use, some for an emergency fund, and some to grow your wealth, and so on. You should then select the best financial tool to help maximize these functions. Stocks and bonds for growing wealth, credit cards and bank accounts for daily use, and money market funds for emergency funds, sinking funds, and idle cash. These three groups of money serve different but equally important functions. Everyone knows about emergency funds. They need to be highly liquid and stable in value. Sinking funds are sort of like temporary piggy banks to help you save up for large purchases in the near future, like saving up for a laptop, vacation, or down payment for a car. Lastly, savvy investors will set aside a portion of idle cash as a market opportunity fund to take advantage of any market crashes to buy good investments at a discounted price. The reason why money market funds are perfect for these three functions is because it allows you to gain interest on these cash reserves without exposing it to too much risk, and you'll still be able to withdraw the money if you need it. Every dollar you earn is working hard towards your financial goal. Lastly, let's take a look at the best ways to buy a money market fund. Just like unit trusts, there are plenty of ways to get your hands on money market funds. But the cheapest, easiest, and most convenient way is to do it through digital platforms like Versa and Stashaway Simple. The reason why I prefer digital platforms is because they offer low to no minimum deposits, and their platforms are just so darn easy to use and set up. Now, I've tried both Versa and Stashaway Simple, and here's what I found. In terms of returns, both gave me nearly the same amount of interest after about a month of deposit. Both platforms don't charge any fees, but the underlying funds do charge annual management and trustee fees. These fees are deducted at the fund level, so whatever interest we receive is after fees. When it comes to the speed of fund deposit and withdrawals, this is where Versa comes out on top. On their website, Versa is very clear on the exact date your deposits will be processed, when you will start earning interest, and when you would receive your funds on withdrawal. Deposits take 1 to 2 days on Versa compared to 2 to 3 on Stashaway. But more importantly, withdrawals from Versa takes only 1 business day, whereas Stashaway takes 3 to 4 days. Versa also pays out interest every 2 weeks compared to monthly payments from Stashaway. Not a big deal, but a nice perk to have. The only downside is that Versa is not Sharia compliant. If you'd like to try out Versa, they were kind enough to sponsor this video and will be giving out 10 ringgit to anyone who signs up and deposits a minimum of 100 ringgit on their platform. So if you're interested, link in the description down below. The 3-part sign up process is super simple and takes less than 15 minutes. You can then start earning interest on your cash right away. And that's all I have for you today. Money market funds are a great financial tool to help you get the most out of your emergency funds, sinking funds, and idle cash. If you're a fan of fixed deposits, consider switching over to money market funds for a more flexible way to maximize your cash returns. As always, thank you so much for watching. Smash that like button and subscribe to my channel if you haven't already, and I'll see you in the next video. Bye!